I want us to look at what is happening in the pension fund in regard to the cryptocurrencies. What is the future outlook of the money that you pay monthly towards your pension fund or preservation fund to the fund managers? Or that's the money that your employer collects and transfer over to the fund manager to make a decision in terms of where they're going to invest that money. So the outlook is that there's a higher probability in future your pension fund money may be invested in cryptocurrency. Before we dive to this video and go through what is happening in South Africa and what are the probability for the future outlook, there are three terms I want us to look at together. Then we continue with the video. The first one is cryptocurrency. The cryptocurrency is a digital or visual currency secured by cryptography, meaning it is a decentralized digital payment system. It's not issued or controlled by a central bank. Instead, relying on a decentralized network like your blockchain to record transaction and create new units. Think of it to store and transfer value online without needing a traditional bank or payment processor. So cryptocurrency doesn't need it's done everything is done online. It doesn't need your traditional bank like your Nedbank, Investec, or you name all the banks that we have in South Africa. However, everything is done through the blockchain and other decentralized network that we have, like your Luno. And then the other one, it's a Regulation 28. Regulation 28 is issued under the Pension Fund Act to protect retirement fund members' savings by limiting the extent to which the funds may invest in particular asset or asset class. It prevents excessive decentral concentration risk, that is not putting all your eggs in one basket. It ensures that you invest in different assets or types of assets to avoid unnecessary investment risk. It provides to retirement funds like a retirement annuity, pension, provident fund, and preservation fund. So, what the regulation does, it does two main things. The first part is to ensure that your money or your investment is not put in one egg. That means they invest in different companies. So they don't put all your money to, for example, Capitec shares or to Nedbank shares, but it is invested to different asset class as well as all different companies. If it is invested to companies, that means they're not only investing your money to financial services, but they're also considering construction industry and other sector that we have in the world. It's better to look at the fact that it's not only invested in South Africa, but also other countries. What else that it looks at, it's and shows that the asset that your money is invested to has lower risk. There will always be risk when it comes to investment, but they do not want to have your money invested to asset class that are highly volatile. So that's the purpose of regulation. It is to ensure that your money is not put in one X, and also the assets that are purchased using your money will has lower risk of not performing. And then the last one is alternative investment. So alternative investment is a financial asset that does not fall into one of the controversial investment categories. Conventional categories include your stocks, bonds, and cash, while on the other hand, your alternative investment can include private equity or venture capital, hedge funds, or managed futures, arts, indicates commodities, and derivative contracts. Real estate is also often classified as an alternative investment. Now that we know those three terms that I believe are going to be important for you to understand this video better, let us look at what I have for you for this video. I've already stated that the purpose of this video is to explain to you there is a higher probability that your money will be transferred or invested in the cryptocurrency space. As the value of cryptocurrencies, particularly Bitcoin, continue to rise internationally, there have been growing calls for South African pension funds to be allowed to invest in cryptocurrencies. Currently, Regulation 28, which governs where pension fund can invest, tightly restricts their investment options. So basically, what happens when your employer takes that 5%, 10%, or 15% from your salary for the pension fund, they do not store that money in their bank's account or in the company bank's account. However, they transfer that money to your funds manager, right? So we have a number of funds manager in South Africa, which I will explain on the other video. So what they do with your money, they collect all your money and then they split your money to invest in different asset class. So what is happening in South Africa, they want to take this money that is collected or that is deducted from your salary and invest it in the cryptocurrency. However, right now, they aren't able to do that because Regulation 28 limits or restricts them to go ahead and invest your money in cryptocurrency. Proposals suggest amending this regulation to include cryptocurrency, which could have a significant implication for the industry and investors. The cryptocurrency industry has evolved and matured over the last decade. It is part of the global financial systems now. And it is a much bigger industry than what most people think or most people want to believe. We've seen a number of times Regulation 28 being amended. That means if they want to amend this regulation to include cryptocurrency as part of the asset class these fund managers can invest to, they can, right? So meaning to say now your pension stand a chance to be used to buy cryptocurrencies, right? And obviously, this article is coming from most fund managers in South Africa. So they are saying that they believe that the industry or the cryptocurrency space have evolved and matured. And they also believe that investing your money in cryptocurrency is indeed a best option for you. If you just look at the Feds, it is integrated by major global financial corporations. This includes companies such as PayPal and blockchain. In South Africa, Discovery offers a Bitcoin fund. Pick n Pay accept Bitcoin payments, and some international markets have even made cryptocurrencies legal tender. Listed companies also now provide cryptocurrency services, and there's a global shift in attitude toward crypto. So, what are the fund managers saying? They're saying the reason they believe that cryptocurrency is the future and taking this money that you keep aside every month and invest in cryptocurrency is indeed a best option for you as an investor or pensioners. Future pensioners, and they have said with why they believe. They look at the fact that listed companies they now provide cryptocurrency services. They look at the fact that Pick n Pay now accept Bitcoin currency, and also Discovery offers Bitcoin funds. So those are the backbones they are using to justify why they believe they can take your money and invest in the cryptocurrency. The United States, for example, is considering a strategic Bitcoin reserves, and US asset managers offer Bitcoin investment to institutional investors. Through firms like Fidelity Investment, American investors can even include Bitcoins in their retirement plans. It will also be good for investors' protection because currently, due to the lack of an investment option for pension fund, people are forced to invest in cryptocurrency directly. So what they're saying now, they're saying the pension fund in South Africa, they are saying internationally, this is now a thing. So investing in cryptocurrency is now a thing. And then they want that they invest your money to cryptocurrency so as to ensure that you're not only investing directly to cryptocurrency, but you're also indirectly benefiting by them investing your pension money to cryptocurrency. This direct investment can be risky. An opening pension fund to cryptocurrency investment would provide safer, regulated access to this asset for South African investors. The National Treasury currently appears unconvinced about allowing pension fund to invest in cryptocurrencies, which concerns centered on protecting people's pension. Despite Bitcoin's recently rare after the Trump election, when its price reached all-time high, many people expect the asset to drop off in the near future. So when we look, we need to look what National Treasury is saying, because National Treasury also is the main governor for this pension fund. So National Treasury is not convinced about investing the money to cryptocurrency. And obviously, that is centered around the fact that your money will not be protected if they took it and put it on Bitcoin. And then they are also saying, despite the fact that the cryptocurrency or particular Bitcoin reached the highs during election, they do not believe that will be sustainable. They believe that it will drop in future, and that is obviously the justification from National Treasury points of view and people that are against the investment in cryptocurrency. Treasury and regulators adopt a balanced perspective, especially considering that the pension fund already permitted to allocate a small percent of their asset to alternative assets. That was for that reason that I explained to you the alternative investment, so that you're going to understand when we get to this point. So basically, now there's a small portion or percentage of your pension that is allowed to be invested in alternative asset. A modest allocation of 1 to 2% to cryptocurrency could offer a sensible opportunity, minimizing downside risk while leveraging the long-term value demonstrated by Bitcoin and other cryptocurrencies. While Bitcoin may be a volatile asset class, it is possible to manage that risk effectively, particularly within pension fund long-term investment horizon. As the number of investors increases and more bond and sellers enter the market, the risk will continue to go down, and often which could be further compounded if the pension funds around the world start investing in cryptocurrency. Bitcoin has demonstrated significant growth in both value and adoption over the past decade. This includes increases in the number of users, transactions, and overall network strength. So this takes us to the end of the topic for today of this video. So basically, just to summarize, the funds managers, different funds managers in South Africa are saying they believe that investing your money to cryptocurrency is a good option for you. And they believe that because your pension fund, it's a long term, it's not a short term thing. By the time you retire, your money would have grown. They believe that the cryptocurrency is volatile, but in the short term, you are affected, but in the long term, you are not affected. That is why they're saying they are of the opinion that your money should go to cryptocurrency. But however, even though they want that your money is invested to cryptocurrency, it is unfortunate that National Treasury has to agree on that, and Regulation 28 has to be amended to include the asset class before they can go ahead. So now those are the talks, and those are the things that you might be aware of, that in future your money might be invested in cryptocurrency. You might decide on your side that you do not want to invest in cryptocurrency, particularly the Bitcoin. However, your pension money might be invested in cryptocurrency. In conclusion, what is my view? I am in the view of the fund manager that this money can be invested in cryptocurrency because this is your long-term investment. And I believe that cryptocurrency going forward has a greater potential of doing well. Thank you for listening to my video up until this far. Can you please subscribe and follow, plus share my channel to anyone that you believe is interested in topic of the similar nature. Thank you. Bye.